It's been a torrid week for banking stocks as cracks appear in the entire global lending sector. It all started off earlier this week with a company that many on this side of the Atlantic really didn't know about called Silvergate. I want to start off, though, first of all, with how the FTSE 350 banking index has opened this morning, because there have been some big declines. You can see clearly here on this daily chart the drop that we've seen, the big gap that's opened up. We're currently down at 4.75% in terms of a loss. It's at this line of support that was established back on the 19th of January. And in fact, it was a line of resistance as well on the 11th of February 2022. So it is a significant level of support. And we've seen many of the UK banking stocks on the way down. This is Barclays showing you some big losses we've got here, taking us back to levels not seen since mid-December last year. So wiping off early yearly gains for the stocks. Same with Lloyds, big drop there. We're off the lows there at the moment, down at 49.94. HSBC, this is a bank that has a lot of business in the Far East. Far Eastern banks have been hit heavily overnight as well in amongst the mix, and Asian banks down across the board. So we've got a big global banking slide on at the moment. We've just seen the US big banks open up all sessions on the IG platform. Further on down for JP Morgan Chase, Bank of America, and also other large US banks similarly on the way down on the session today. Let me just quickly run through what's been happening, because I want to bring up a chart of Silvergate. Now, this was the early mover on the way down last week. This was a bank that had been a traditional bank that went into the crypto market, and it suffered as a result of the Sam Bankman-Fried problems that had been happening. And you can see this company going into Thursday's session with the news that it was going to enter voluntary liquidation. There's been another bank overnight, though, that's been hit hard, a 60% loss for this bank, one of the biggest movers in the last 24 hours. That loss for Silicon Valley Bank, a key lender to technology startups. The slide coming after the bank announced a $1.75 billion share sale to help shore up its finances. According to Reuters, it's lost another 20% in after-hours trade late last night, as some startups who have money deposited there had been advised to withdraw their funds. It launched the share sale after losing around $1.8 billion when it offloaded a portfolio of assets, mainly US Treasuries. The big question is where all this will end, but it certainly seems like going into the back end of the week, got a lot of pressure building for the banking sector. It's not just those that are exposed to the technology and the crypto space, but it's now beginning to leach out into other areas of the banking sector, which could be a worry as we look into next week.